MornY'all. Ever wonder how two people can share the same lunch, same table, same check, but only one gets to write it off on their taxes? That's a strange little line the IRS draws between being the business and working for the business. If you run a C corporation, you and your company are two different people in the eyes of the law. The corporation pays you a salary. You are its employee. And every dollar you spend on travels or meals belongs to the company first. That means corporation gets the deduction. Usually 50% of the meal, none of the entertainment. And it has to prove those meals were ordinary, necessary, and not too fancy. You just turn in receipts and hope you filed them with 60 days under what's called an accountable plan. Do that and your reimbursement isn't taxed. Miss it and it becomes wages on a W-2. Now, cross the street to the Schedule C filer on their 1040. Self-employed person, no corporate wall, no payroll department, just one form, Schedule C on the 1040. You don't reimburse yourself for lunch, you just record it. Half deductible if it's a business meal, subject to the same ordinary and necessary rule. Your gas, your parking, your airfare, your hotel, they all go right there alongside your income. No middleman. The difference? C corporation owner works for the company. A Schedule C filer is the company. And that tiny difference changes everything. The C corp owner's company files Form 1120 and keeps a ledger of reimbursements. The Schedule C filer reports everything directly. Even retirement works differently. Corporation deducts its contribution as an expense, but the sole proprietor takes them later, above the line, when the calculation adjusts gross income. Both follow the same rules of deduction, but walk different paths to get there. And don't forget the taxes. C corporate employees pay FICA through wage withholding, while the self-employed pays self-employment tax on Schedule SE. If they earn more than $400, so same meal, same miles, same business purpose, but two entirely different systems keeping score. Think of it like watering a garden. C corporation is the fence, paying for the hose and reimbursing the gardener for every drop with receipts. Schedule C filer just fills the watering can and pours straight on the well. Both feed the same soil, both grow the same business. They just take different routes to get the deduction. So the next time you're splitting the check, remember, the way you file may decide who really gets to write it off. Los Sabes.